the truth about my SPY algorithm, and that, a 40% gain on my overnight trade. The journey to develop my current successful purple algorithms started with a question. What if? In early 2022, when I was working on some calculations related to the market, I noticed some patterns. When certain calculations were positive, the market opened positive. And when those calculations were negative, the market tended to open negative. And of course, I'm thinking instant millionaire. It's been good, however, I certainly didn't think it was going to take over 3 years to get to where we are now. I've spent a lot of time in Google Sheets calculating and recalculating my ideas and formulas and algorithms. And you can do the same thing because over time you'll get better and you'll understand how to automate things and all the tips and tricks within Google Sheets that will make things easier. These automations will give you time to spend more time on creating better formulas. I encourage you to take some of these ideas and develop your own indicators to help you with your trading. But if you don't want to do that, of course, mine is available for free at 4 o'clock Eastern Standard Time over at spytomorrow.com. It wasn't long before I started using different data and data sources depending on my ideas and concepts. There are many different places in which you can get data. And I have to pay for the data that I use now. However, there are some free options. Of course, you can get some data from your broker. And barchart.com is also an excellent place. They have lots of resources, lots of data. They have free and paid plans. Now, this is not a sponsorship or a promotion. I'm just letting you know what I've liked to use in the past. I'm a creative entrepreneur. I like to create things, but I don't necessarily like to stare at a trading screen all day. So my concept was if I could measure the pressure at the end of the trading day that correlated to how the market might open the next day, then I could develop overnight swing trading strategies. It worked, then it broke, and it worked, and then it broke, and then it worked, then it broke. The adjustments kept coming. One of my biggest discoveries as to why this was happening is what I refer to as the switch. And it literally switches my positives to negative and negative to positive. And if you don't know what's happening, you're going to wonder what's happening. Well, I eventually found out exactly what it was. Unfortunately, that is one of my secret sauces, so I can't tell you what it is. But knowing that can happen can save you a lot of frustration. One thing that I found valuable that helped to speed up development was keeping a copy of each day's calculations. That way I could review them in the future. Eventually, I had so many calculations that I developed a row, a line within my Google Sheets of all the final calculations. There may be 10, 20, even 30 or more calculations. And what I would do is I would copy them and then I would paste them on another sheet next to the prediction day. And then I could see which of the calculations were correct, either up or down. This way I could review the calculations in the future over 30, 60, or say 100 days and see which of the calculations were correct most of the time. Even better, find the best combination of calculations, maybe 3 or 5, that tend to be correct most often. But there is one thing you need to consider. It is important to remember that although some of the formulas will match up to how the market opened 60, 70, 80% of the time, sometimes it's just random chance that it worked out that way. However, it's a good starting point for further investigation. I've certainly been victim to that in the development of my algorithms. I would see a combination of, say, 3 formulas that matched up really well to how the market would open, say, 75, 80% of the time, maybe over 100 trades. I had a lot of confidence. I would test a little further and see that it continued to work, and then I would give it a name and release it to the public for it to only fade over time. This was especially true when I was just developing random calculations just to test them and not really have any thought behind why they might or might not work, which is certainly not the case with the purple algorithm, which I'll explain in a few moments. While developing new formulas and algorithms, I would have many successes and certainly probably a lot more failures. However, whether it was a success or a failure, I learned something new just about every time, and quite often I was able to go back to some of my older algorithms to revive them. You have to know, by the beginning of 2023, I had a lot of formulas that measured the market pressure at the end of the trading day. And I had a brilliant idea. I would take the best of the best, 81 specifically, and create what I refer to as the heart. The heart has become a valuable tool, and we still use elements of it today. It's an excellent framework that we'll continue to use and experiment with in the future. However, the original heart, the red heart, made up of 81 different results, worked well. We tested it over 100 trading days. We found the best combination and the best way to read it. However, over time, it also began to fade. However, with the development of the hourly and half-hour pressure readings that we offered to our members, new insights started to develop. And that led us down a trail that ultimately led us to the purple algorithms. Next, I started playing with AI again. I had dabbled with it in the past with some of these concepts. However, the results were rather poor. However, I had new ideas that I wanted to feed to the AI, and I was hopeful that it would come up with some interesting solutions. And it did, and I back-tested many of them, and we came up with the MPI, the Market Pressure Index, along with some other formulas that were very promising. However, once I released them and I started leaning on them, they ultimately started to fail, and fail rather quickly. In the fall of 2022, we started offering hourly pressure predictions for our members. It seemed to work well in combination with other indicators our day trader members were using. Eventually, by the spring, we were offering every half-hour pressure predictions, and it allowed for a lot more data and allowed us to improve the pressure prediction formula, which eventually allowed me to start thinking about different ways I could apply it to the overnight formula, because initially they didn't work the same way, but I figured out what I needed to do. And now I'm actually measuring the pressure the way I wanted to read it by taking the last reading of the daily pressure report and using it in combination with the end of the day report. One of my early algorithms was called the N2VV, and it was extremely accurate until I ran into a switch. And at that time, I didn't know about switches. But now, with this concept in mind, I was able to apply the switch and these concepts that made the N2VV work well, which has led me through the yellow and the orange and now the purple algorithm. And the purple algorithm allows me to see something that I could never see before. A switch that probably ruined a lot of the other algorithms, but now I can see it. But I have no idea what it is. However, being able to see when it happens allows me to create formulas that I can apply to some really good algorithms that I had to let go of in the past. Over these 3+ years, I gotta say candidly, it has been exhausting and at times highly stressful. Yeah, everything is great. It's a lot of fun when people are cheering because the algorithm is doing its job and they're making money. Everything is great until it starts to fade and people start making that quick exit. And rightfully so. However, it is defeating and sometimes you feel like a little bit of a failure. And then you go back to the drawing board and you look at the new things that you have learned. And then you think about the formulas that have worked well in the past and quite possibly maybe the things you've learned now could be applied to them. And you continue to develop new ideas and continuously improve the quality of the formulas and the algorithm. with each generation, it gets stronger. It's harder to break. And that's the way I feel about the purple algorithm. If the purple algorithm holds and stays as consistent as it has been, I will be doing more directional trades, small trades, because I have the confidence to do so. But of course, we have the SPY T trades, which allows us to use ratios to protect ourselves, especially when we know we're going into earnings season and the mood of the market can easily flip, or maybe there's some government data coming up. However, the purple algorithm has weathered through pretty well. And with the releases of the Purple Plus and the Purple Max that are even better and doing a great job, it allows me to refocus my attention on other areas of SPY tomorrow, to improve the confidence numbers, to improve the full pressure readings, as well as addressing the heart, possibly turning it into the purple heart. If you enjoy experimenting and like math or even coding, I highly recommend that you work on developing your own indicators. However, if that's not for you, of course, SPY Tomorrow is always free on the front page. I encourage you to test out the new SPY Tomorrow purple indicators. It's the one that's available on the front page of spytomorrow.com. And begin by paper trading, and then if you get a little confidence, maybe some small trades using real money. However, for the best results, I highly recommend that you try the 30-day challenge. And I'll see you in the next video. All right, back at it.